Hey everyone, welcome back to Corporate Decoder. Today we're diving into the latest annual report from XTI Aerospace. This is going to be a bumpy ride, folks, with talk of reverse stock splits and high hopes for flying cars. Let's find out if this company is soaring or just stalled on the runway. XTI Aerospace wants to build a special airplane that can take off like a helicopter but fly like a regular plane. They're also in the business of tracking things in factories, which is very different from building airplanes. So is that a case of not putting all their eggs in one basket or spreading themselves too thin? First off, this is their annual report, a Form 10K, which means it's a deep dive into everything that happened over the last year. This report is for the year 2024. As of June of 2024, the company's stock held by non-affiliated folks was worth about $11 million. Not a huge number, but it's something. As of April 11, 2025, they had about 5.5 million shares of common stock out there. Now, big warning sign here. This report contains a lot of forward-looking statements. Basically, they're making predictions about the future, and they want you to know that those predictions might not come true. We're also told that they have a history of losses and might have trouble getting funding in the future. One key risk is the ability to actually finish building the Tryfan 600 on time. Or ever, there's also risk they won't get the certifications needed to fly it. Then if they can even build it, will people want to buy it? The company is still in design phase and is very dependent on a constant influx of money from investors. If they can't do any of these things, then their business plan might just fail. So what exactly does XTI Aerospace do? Well, they're trying to make a vertical takeoff and landing, or VTOL, airplane. They want it to be able to take off and land like a helicopter, but then fly fast and far like a regular airplane. They think this Tryfan 600 will be useful for business people, emergency services, and even regional air travel. They're also thinking about getting into drones that can fly on their own. The company also plans to invest in marketing to build up their brand. The company says the market for these kinds of planes is pretty big, about $31 billion, and that's grown a lot since last year. They have pre-orders for over 290 airplanes, but these pre-orders are conditional. That means the customers can back out, and XTI might have to return their deposits. The company also had some tech for factories and warehouses that help companies track stuff in real time, kind of like a high-tech game of Where's Waldo? They're exploring selling off the hardware part to focus on the software side. The company is talking with the FAA about what it will take to get approval for their airplane. They've submitted their application for type certification, which is a fancy way of saying we want to prove our airplane is safe. They are looking at type certification around 2030. They are partnering with sales agents to get the word out about the airplane, specifically in the Middle East and North Africa. Mesa Airlines in particular said they want 100 of these Tryfan 600s, but they can back out of the deal if they don't like the final terms. Their factory tracking tech is used in all sorts of places, from car factories to military bases. After a bunch of tests, the team tweaked the Tryfan 600's design. They are now working on a newer version called C21 TOL and are looking to pick suppliers to help build it. They've got patents to protect their idea for this airplane, both in the US and in other countries. This is where things get a bit technical, so let's just brush over this. XTI Aerospace is considered a smaller reporting company. In June 2024, the aggregate market value of voting and non-voting common equity held by non-affiliates was approximately $11 million. So now let's dive into the financials. The company had a net loss of about $35.6 million last year. That's more than the $1 million they lost the year before. They have a big pile of debt and negative cash flow. And they don't even expect to make any money selling airplanes until 2030, if they can even get them certified. They know that losing money is likely going to be an even bigger problem moving forward. Due to a paperwork issue, they can't use certain shortcuts to raise money until August 2025. That means it might be harder for them to get the cash they need. Since it's an airplane, it could crash. Any accidents could hurt their reputation and make it harder to sell the Tryfan 600. Also, the company is dealing with lawsuits and other legal claims, including from the SEC. The plan is to build a full-size version of the Tryfan 600 and actually fly it. Then they'll need to get it certified, which they think could take another 2 years. So best case scenario, they're looking at 2030 before they can actually start selling these airplanes. The company also has a deal with a sales agent to sell the Tryfan 600 in the Middle East and North Africa. 4 customers make up a big chunk of their income. One of them is 23% of their income. So if they lost those clients, it would be bad. The company received a utility patent and a design patent for a VTOL airplane and applied for foreign patents. As of the end of 2024, they can't get any refunds on about $96.9 million worth of losses because of some tax rules. The company says that things like storms and floods could affect their ability to do business. Being ineligible to use SEC Form S-3 may significantly impair the company's ability to raise necessary capital to fund its operations and execute its strategy. The company is not considered a large accelerated filer or an accelerated filer. They're adding fancy data analysis and AI to their factory tracking tech. They are trying to hire and keep talented people. The Ukraine war has also caused problems with their supply chain and driven up costs. The company has been and may in the future be the subject of SEC and other regulatory investigations. They're working with partners and customers on 5G requirements, use cases, and solutions. The company is integrating ChatGPT into their tracking services to make it easier for managers to get information. Their main office is in Englewood, Colorado, but they might move it to an airport soon. Okay, let's quickly glance at the financials for the year, and I mean quickly. Revenue, a tiny $3.2 million compared to zero. Operating expenses are through the roof, up to $38.9 million. This translates to a pretty sizable loss from operations, about $37 million. They did get some other income, but overall they ended up with a net loss of $35.6 million. Basically, they're spending a lot more money than they're bringing in. Here's a comparison of the years. We can see this is driven by the industrial IoT segment and their full stack offering. As of December 31, 2024, they can't get any refunds on about $96.9 million worth of losses because of some tax rules. The company may be a party to future claims relating to the XTI merger. The company is involved in several proceedings, and the results of those proceedings are inherently uncertain, and there is risk that it may have a material adverse effect on its business. They are exposed to significant reputational harm and potential legal liability if anything happens. Form S3 permits eligible issuers to conduct registered offerings using a short form registration statement. As a result of their failure to timely file a current report on Form 8K, they are currently ineligible to use Form S3 until August 2025, which may impair their ability to raise capital on terms favorable to them in a timely manner or at all. There may be a shortage of pilots and mechanics who meet the training standards required, which could reduce the company's ability to sell their aircraft at scale and on their expected timelines. Since they are not permitted to deliver commercially produced aircraft to customers until any such aircraft has obtained FAA certification, no material aircraft sales revenue will be generated before receipt of FAA certification. The company have been subject to government or regulatory investigations or inquiries under national, regional, and local laws, and any resulting enforcement action could have a materially adverse effect on us. Climate change, such as increased frequency and severity of storms, floods, fires, and freezing conditions, could affect our operations, infrastructure, and financial results. The company granted a worldwide license to use and practice intellectual property. XTI Aerospace has an annual assessment performed by a third-party specialist of the company's cyber risk management program against the NIST CSF. The company relies on governmental data, market data, and industry publications. The Audit Committee of the Board of Directors oversees XTI Aerospace's cybersecurity risk exposures and the steps taken by management to monitor and mitigate cybersecurity risks. They lease some office space in Colorado and Germany. The company had commenced an arbitration with FINRA against Chardon Capital Markets LLC. Let's do a quick recap. They're trying to build a virtual airplane, but it's super expensive and risky. The success of the company depends on the integration of the newly acquired InPixon technology. The company also has some factory tracking tech that's actually bringing in money, but that part of the business has a lot of competition. They might have trouble getting the cash they need, and they're dealing with lawsuits. Overall, XTI Aerospace is making a big bet on the future of flying cars, while also trying to stay afloat with their existing tracking business. It is hard to see what might happen with the company based on all the risks, but if they can actually get this airplane built and certified, and if people actually want to buy it, they could be onto something big, but right now it's a pretty risky investment. So it's XTI Aerospace for you, aiming for the skies, but still dealing with the realities on the ground. What do you think? Will XTI Aerospace make flying cars a reality, or will they crash and burn? Let me know your thoughts in the comments below. Don't forget to like, subscribe, and hit that notification bell for more corporate deep dives. Thanks for watching.